Hello guys and welcome back to the channel. So I was wrong about Palantir earnings and the street still does not understand Palantir. It's unbelievable after these years. I actually did a video, it was one of the most viewed videos on the channel, which is called Understanding the Business Model of Palantir. And if you're new to Palantir, I really recommend you to watch that video because you're going to miss an unbelievable opportunity in Palantir and in the coming years. So I'm sorry guys, I didn't manage to cover Palantir earnings yet. I don't know how this happened. I started my channel off with Palantir. It's 50% of my portfolio, but my second 50% of the portfolio happened to report on the same day. And the company out of the blue, that company is Rocket Lab, wrote me an email that the CEO would like to talk to me on the channel about the Q1 earnings. So I was really busy with that. It was a huge honor. But now that is all gone and I had time to really deeply study Palantir earnings. And boy, am I surprised. So I wanted to make a video about it. So please make sure that you're subscribed and let's go. So I went into super bullish about Palantir earnings. I bought $2,000 worth of call options. And because I felt that, you know, like the company behind what you can see is doing way better than what the stock price represents. And I was hoping that it would come out on earnings. And if you remember, the stock ran up like almost 10% just before earnings, and my option was 200% plus, and I was stupid enough to not sell that option. The earnings came out, and apparently it was a huge disappointment. I don't know to who, and I lost all the money on the options. And that's okay, you know, I'm a big boy, and I knew that that can happen, and I knew it very well going into the earnings. But what happened on earnings that created this major run up and then very disappointing results? So I went through the numbers and I found the problem. So the problem is that Wall Street likes Excel sheets and they like to be very conservative and they want to be slapped in the face by the results before they believe them. And really keep this in mind. This is where I think that the retail investors have a major edge over Wall Street because, you know, we're allowed to think, we don't have to be robotic. And if we see that something is going to happen, like for example, if we see that we park outside, I give you an innocent example, like let's say you park outside at a restaurant and you are calculating that, okay, last quarter there was 500 people walking in, and now we see 1,500 people walking in, and we know that the average spend at the restaurant is $100, but now it's 3 times the people. So then we can very safely estimate that the earnings is going to be 3 times better. But Wall Street, for some reason, they don't have the capacity or the brain power or what, or the balls, or I don't know what, to do this, and they want to wait and see. Oh, okay, the revenue grew 3x. Who the F saw it coming? Okay, now we need to raise our guidances and we need to raise our target prices. And this is really what happened and still is happening with Palantir. And I believe it gives us a huge opportunity as Palantir investors. So again, look from this viewpoint of what I just said. You have leading indicators and you have past indicators. So every past indicator is okay. And every leading indicator is screaming that something is happening on the background. So for example, this is a past indicator, year over year revenue growth, 40%. That's very, very respectable. Last quarter, it was 70%. That has to do with Arnie put out a great tweet that just that comparison was a very easy comparison because compared to Q4 2022, they lost US commercial revenue. So it was like, it wasn't a real 70% increase. It's like if you average it out, it was a 40% increase. And this quarter is also a 40% increase. But this is a past indicator. Now, what is a future indicator? US commercial customer account. So because we know, again, if you watch that video, Understanding Palantir Business Model, we know that Palantir is I know people hate when I use this, but Palantir is like a cancer. They go into a company and then they just spread and spread and spread, and the company becomes more and more dependent on Palantir. I know I always get comments of how horrible this comparison is. If you find a better one, please let me know in the comments, but you get the point. So if the customers are growing 69%, then it's only logical that the revenue over a period of time is going to catch up to this. Here's another clue, another future indicator. US commercial remaining deal value, 74% increase. So that was even faster than the customer growth. 136 US commercial deals closed, and that's a 94% year-over-year increase. Again, it's like you close the deals, then you have to deliver them, and then once they're delivered, that's when they're recognized in the revenue as a quarter. So there is a delay, and Wall Street is only looking at this, and they're like, it's only 40% growth. I don't even know what's wrong with only 40% growth. But all the leading indicators, again, are showing that there is something much bigger happening in the background. US commercial total contract value, 131% plus. 3-year US commercial customer account growth, 12x. That's not 12%, that's 12x. And guys, AIP has only had 3 quarters, and these are happening. So it's really mind-boggling. You can see that Palantir is very nicely increasing its profits, the GAAP operating income. Everybody who says that, this company has a way too high P. Yeah, because they just became profitable, and it's very usual that when companies just turn profitable, when they're growth companies, that the P looks insane. So it's not really the relevant metric to use at this point. And I believe that this print significantly brought their PE down. Granted, I believe it will be still high for value investors, but we know that it's going in the right direction. So again, these are past indicators. Commercial revenue or backwards looking indicators, 27% year over year growth. So that's the international that is bringing this down. US commercial growth, 40%, very, very respectable. Government revenue growth, 16%. That's quite slow. And we can see that the US government revenue was 12%. And what's nice with this is that the international government is doing good, because that's what basically was probably like 20%. So it was the US government and the international commercial that sucked. It's like a very interesting dichotomy there. Total revenue growth was 21% versus the 17% that they guided. And this is another thing that is completely, utterly nuts. So the adjusted operating margin was 36%. Like, I didn't even have 36% in my most bullish projections. I was like, my projections were between 20 to 30. And they are doing all this while they're growing like crazy. So somehow, like, Palantir found the holy grail, and they are keeping their operating expenses barely growing while their income is exploding and their margins are exploding. And 36%, I mean, show me another company that has such a high adjusted operating margin. I guarantee you there's not a lot of companies who have that. Again, forward-looking indicator, insane growth. Insane growth. And you can see AIP came somewhere here, and you can see they went from 4% to 12%, and then the growth is accelerating. And what do we know when there is more Palantir customers? That means that there's more and more revenue down the line in the next coming quarters. So here is here's the part where Wall Street freaked out. So they raised their guidance, which was very, very good. But the year-end guidance, they raised a tiny little bit. So this guidance is still 20%. So in my universe, this is an obvious sandbagging. Why do I think that this is the table that I use to track Palantir? This is my Palantir valuation that you can get access to if you join the channel membership, or if you want to support the channel on Patreon. It's $5 a month. And I just want to show you something. So two things that I think are really, really interesting. So one of them is that Palantir was growing 49, 36, 34, 30% all the way up to Q1 of 2022, basically before the bear market started. And at this point, they didn't have a sales force, they didn't have AIP, and they were still growing at 30%. And then we had this mega slowdown, and the growth went all the way down to 13% in Q2 2023. And then in Q3 is when AIP really started. You can see that the growth turned around and we're growing. And this quarter was already 21% growth. Now they're estimating 22% growth for Q2. And the only way that they could have 20% growth for the year is that the next two quarters have to grow like 19 and 18%. So they have to go backwards. And this is such an obvious sandbag that I cannot even tell you guys how obvious it is. There's new customers coming. There is all these good things happening that shows you, if you use your brain, that things are going to explode. And yet Wall Street just takes it at face value and they're like, yeah, they're going to slow down in Q3 and Q4. And that's what gave you this 10% drop. But again, if you can use your brain, this is a huge opportunity, I believe. Obviously, the risk here is, just to be transparent, is we don't know by how much they are going to be growing by. And to be honest, I don't even know if Palantir knows by how much, because they really are a startup. I never gave them credit how much of a startup they are, and they just they just flip business models. They come out with new products. They surprise you left, right, and center. And with AIP, they said that they're just going to take the whole market, and they don't have a pricing strategy. And Karp said on the earnings call, if you listen to it, that they're still figuring out how to close customers. So we can see that they are closing customers. But Karp thinks that they could do much better, and they're already growing at 22%. So I would be very, very surprised if the full year ended up meeting their guidance. Yes, then the fall would be deserved, but I guarantee you it's not what's happening. So if you believe that they're going to go back to 30% growth, which why couldn't they, right? Like without AIP, without a sales force, they were growing in the 30% level. So if they have this brand new way of selling that the whole industry is copying, and they revolutionize sales, how come they cannot even go back to that level? So if you think that they're going back to 30+% growth, the stock is very, very undervalued. If you think that they're going to just keep growing at 20% and this is not sandbagging, and this new customers just, I don't know, they will just evaporate. Like they came to the boot camps, they said all these good things. They said how, they spent millions of dollars with other companies and, years, and the things didn't work. And with Palantir, it was working, within 3 days, and they're saving millions of dollars. And then you believe that these people are going to go home and they're like, yeah, whatever, let's go back to our old ways. Then the stock is very expensive right now, but it's your call. Let me know in the comments what you think. Let me know if you enjoyed this video. And yeah, if you want, you can support the channel by becoming a channel member, and then you get access to all the valuations of the companies that I follow, Rocket Lab and Palantir, and I believe there's a few more. And also, if there is guests that come on the show like Peter Beck, and I'm going to have Ashley Vance on, and probably some other people too, the channel members and the patrons will get to ask questions, and I will try to feature those questions if I can. And so just have a look at it if you want to. But the most important thing is that you're here, you're watching, you're pressing the like button, and yeah, I'll see you in the next video. Ciao, ciao.